Good late morning, everyone. Andy here in the sniper room. It is July 12th, a Friday, and it was a pretty doggone nice morning of price action across the board for a Friday in the summer. Would definitely not be complaining on what we saw today. You know, there was consolidation here and there for sure. That's what we'd anticipate, but different markets, gold, crude oil, and the DAX, between the combination of the three of them, there were a lot of very nice opportunities. So we're going to look at a couple of different things in a brief review session this morning. What we're going to start with is a detailed but brief, because there's not too much to it, description of the X trade. The X trade is one of the newer sniper systems that we've taught and defined for our sniper family. And what it does is it enters the market on a pullback, which is unique in the sniper tool set. The majority of sniper signals are entering the market on a breakout. They're using a buy or sell stop order for shorts, buy stop orders for longs. And the difference with the X trade is it's identifying areas where we expect continuation with the short-term trend, and it's placing an order to be a seller when there's a downtrend and the market is moving back up into the order. So we use limit orders for the X trades, and it's kind of like stepping in front of a freight train. So this type of trading, this type of trade setup is not for everyone. Not everyone's comfortable with just kind of putting an order in there and waiting for the market to come and get them. But for those that are okay with it, it's a very effective and quality system. So here's the main qualifications that we're looking for. We want our action line to be yellow. Some traders are okay if it's gray, definitely not okay if it's black. Okay, so you have to determine for yourself. I personally, in most all situations, want that action line to be yellow. And then we're looking for a situation where we have red bars moving lower, and we want the price bars to pull up into the action line. And we're going to get short with a limit order somewhere between 2, 3, 4 ticks in front of the action line up to the action line. And where you place your order is really up to each individual trader. You got to create your rule set and backtest your rule set. The more you front run the action line, the more trades you'll get into. The closer to the action line that you place your entry, obviously the quote-unquote better fill you get, so that if you are filled, you can use a little bit tighter stop, you can go for a little bit larger profit target. So, you know, there's pluses and minuses to where you choose to enter your trade. But somewhere between 4 ticks in front and right on top of the action line is where you should, make a determination. 4 is a little bit, most traders are looking at somewhere between 3 and 1. 1 tick in front to 3 ticks in front of the action line. That's where most sniper owners that use this system will want to be placing their order. And what we're watching for is we want to get filled into our trade while the bars are still red or green. So if the bars have already turned blue before the market is pulled back to this area that we just described, there is no trade. Okay, so we're looking for the bars to be red or green on the pullback to enter the trade. The other thing that has to occur that's very important is you have to look down at our pulse extreme indicator. This indicator here that has all these colored lines and then the white gap and then all these gray lines, and the line that goes through this indicator is called the pulse extreme line. And what we need to have happen for a short trade is we need to have only red or green bars on our pulse indicator lines, no blue. So in other words, when we pulled back here to the action line, this was not a X-trade buy because we had both red and blue bars. So that's why this was not an X-trade buy right here. But we got rid of all the blue, and all we have, it's okay to have green. In this case, we have all red on the pulse extreme indicator. It's okay for there to be green and red. We have to have at least 3 red lines, and it's okay if all the other lines are actually green. It's just important that none of them are blue as far as qualifying for this trade. So we have no blue on the pulse extreme indicator. The market's pulling back, so we place our limit sell order. We get filled during the first green bar. That's awesome. And we get a nice big winner here. And on this trade, we actually took about 15 ticks of profit or so. We went for an extended profit target. We talked about that because we had such a quality topping area in here. We had a lower high action line pivot. You can see the action line put in a high pivot here, came back down, and then put in a lower high action line pivot. That adds a lot of value to the sell side. Structurally, we had a nice double top in place here and a retest. So this was an area where breaking down below this DPTL and below this prior pivot low and then retesting that area, this was an area that had extra value. And I talked about this when we were trading live today, and obviously the traders that were in the room at that time saw me execute this trade and take 14, 15 ticks of profit on that one. So we identified that as an area where we could get more than 5 ticks, 6 ticks, 7 ticks, which is a more normal standard profit target. And that's the X trade, okay? If we roll things back a little bit, I shorted up in here, and this trade was largely based off of, well, there were a lot of factors for this trade. Shorting in here took a little bit of heat, not too bad, and then we ended up taking 16 ticks of profit on this short trade. We had multiple different standard signals up in here. We had our standard sniper, we had our pulse extreme line cross. Okay, one of the other big things I was looking at to confirm wanting to be short was this triple pivot double divergence. Okay, while we had price action moving slightly higher across these pivots, we had our OS line moving lower. So this was a pretty solid topping area. You can see we had a DPTL resistance zone just overhead as well. So all those factors combined, I determined. Also, one other thing is we had a reasonably quality pulse count. Okay, for those of you that know what that means, we had a +3 pulse count in this area. All that gave me permission to get short in here and take advantage of a nice big win there. Now let's just go through the rest of the day and look at the X trades. So as we're coming down in this area, notice we have all red and green, no blue. So we're pulling back, getting short on the X trade, nice winner. Obviously a much lower rated trade here because we got a DPTL. We also have the 50 XMA here. So this trade did not qualify for me. I did not execute this X trade here, but it did produce a nice winner. This X trade is a little bit higher quality down here because we broke down below this area of support, below the 50 XMA, came back up and retested. There wasn't a huge amount of profit there, but it was available for a winner. The next trade, X trade, occurred over here, and that's the one we just spent our time outlining, and this was a very high quality X trade. We had a second X trade that did qualify but was much lower rated. We spent some time during the trading day today defining why this one was so much better than this one. We used it as an exercise for you guys to show what you know, and you did great determining what the reasons were. Some of the main basic ones are we have a solid down move in price action but an upsloping OS line, you can see we have significant upside divergence on the second signal. The first signal didn't have any upside divergence to worry about, made it much better. The second signal had very strong upside divergence. That's a negative. I moved this, we had a blue prior pivot line there earlier in the day. I moved it and used it for something else. But when we were trading live, we had this line here. And that's why I took my profit target early or in front of that line, and also a big reason why this signal was lower rated, because we're coming off of support. Okay, we're coming off of support. Another indication is that makes this trade lower rated is the 50 XMA overhead will often act as an attractor, and it's further away at this point. So you know, that can definitely cause some issues. So there are a few other things we talked about, but those are some of the main ones that many traders would have the ability to discern, you know what, I'm going to take this one, but this one doesn't fit my trading plan. Another big one, guys, was that our pulse line here is pegged at -10 this whole time. That's very positive for a short. Before we get filled on the second trade here, the pulse line is moving up. So that's a slight negative. None of these things are disqualifiers. You have to determine, you know, what your personalized trading plan is going to say and determine which trades you're going to execute. But we're just pointing out how a trader can outperform a robot. A robot would have shorted here and had a winner. A robot would have shorted here and had a loser. But a trader might not have taken this second one because of many of the reasons we're describing. The more robotic trader can absolutely still make money. Most days they sit down at the computer. That's how good these systems are and these tools are. When you put your trading plan together, do your back testing, prove that it has an edge, you can be successful as a robotic sniper trader. And that's awesome, and that's where a lot of traders start. But most traders, most individuals want to take their skill level to, you know, to the next level. They want to get better and better at their craft. And that's what hanging out here in the live room helps you do, is you learn some of these nuances. All right, we got another short opportunity here. You can see all green and red, no blue. That's what we need. Short, took a little bit of heat on this one, not too bad, winner. The next X trade, not, again, you could point out some reasons why this first one's a lot better than the second one. Does this one qualify? Yes, it does, but it is lower rated. One of the things you should notice is on this second green bar, the first 5 lines on the Pulse Extreme went green, and that shows a transition that's occurring. You know, it starts, the lower edge of the pulse indicator are the lower, are the lines that will change color more easily. And when all of those change away from red, the first 5, you know that you probably got some blue coming, and you may have a bit of an up move coming. So it's just a little bit of a nuance. You can see over here, we didn't lose all of them until 3 bars later, okay? And then we got right back to it. So just, again, a little bit of a nuance. The main thing here, however, is the fact that we came off of a support area, okay, that makes this lower rated. I have more recently added that as part of my trading plan. I will not personally take an X trade that's coming off of a support or resistance area unless I have overwhelming other factors that make the trade really good, which I think a little later we'll see one of those examples. But this was certainly not one, and was a trade that was pretty easy to skip. Our next X trade came right here. You can see we got rid of the blue bars. We only have red and green. We pull back to the action line. Nice short, nice winner. Next trade occurs up here. We executed this one live. Blue bars coming up, all blue in the pulse. Pull back, nice winner. No X trade here because we got blue and red, right? We need only red for a sell. We come up in here and we got an X trade short. If you're filled early, you might have got yourself a quick win. If you're filled a little later here, I marked it with a triangle, which essentially is a, let me see how much profit. Actually, there's 6 ticks of profit there, so this is probably a winner for most traders. But I marked it as a break even, and the reason is you notice this nuance happened here and here, where you get into your X trade only to have the first bar that closes down after you're in your X trade have an upsloping os line. Happened here and it happened here. I get out of those trades right away. That first bar after I'm in an X trade, I want to be moving in my favor. Now sometimes the market moves so quickly you'll have that situation, but you'll get your winner, you know, before anything else much can happen, and that's okay. That happens too, but that's what I'm looking for. We had an X trade here, and you know what, guys, we're not going to win them all. This was an okay trade. We came up out of an area that overall we spent about 90, 100, 120 minutes in consolidation in a 40 tick range. So none of these trades are overly high rated. Then we got back to it here. Boom. Nice winning trade here. This did not quite qualify as an X trade, right? Because we had just a little bit of blue. So it was a good trade. It was a pulse extreme line cross, but not quite an X trade. And then we had another X trade short here. That one was a loss. Right back on the winning ways here, and this was a good big win. And now this is into live price action. We just had one more X trade that qualifies here for another win. Okay, filled on the second green bar, so it does qualify, and lower rated for sure because it's a second green bar, and then you can see the next price action is red, but it's a win. So let's add it up. It wasn't a great day for the robotic X trade, but not bad. 1, 2, 3 and 1, 4 and 1, 4 and 2, 5 and 2, 6, 7 and 3, 8 and 4, 9, 10, 11, and that's it. 11 wins and 4 losses, something like that. And a couple of those wins are close, so maybe to make it 11 and 5. So not bad if you're taking every single signal. At least half of those losing trades were relatively easy to avoid, depending on, you know, if you're looking at using some of the nuances. One other thing I wanted to touch on real quick before we call it a day is we defined a pretty cool trend channel early on this morning. And we drew this trend channel right in here. So right in this area, we should have noticed it a little sooner, but this is when I put it on the board right here. And I want you to notice how many times this market turned at the channel. 1, 2, 3, and then we had a news report out, okay? So it busted through the channel during the news report, which isn't too surprising. Then right back into the channel, and then boom, bounced off of it again. Bounced off of it again. Look at this, all the way up. And the neat thing is we generally have other sniper tools in these areas, you know, giving us idea, you know, it's not only the trend channel here that offers a trading opportunity. For example, we have a X trade, you know, right here. This is we talked about it live during the day. Very, very nice X trade. And there's other different tools and systems. And right in here you can see we finally broke out a little bit more significantly. We came back up, retested the opposite side of the channel, and it held for a bounce. Same thing happened here. Boom. Okay, so you can see how little conventional tools reacted off of it up in here can provide you with another confirming factor. Okay, if you're willing to add some of these additional tools. You still have your baseline. You know, I'm trading the Sniper Pulse Extreme Indicator. I'm trading the Standard Sniper. I'm trading the X-Trade, whatever it may be. But the more you're willing to add a few of these other structural nuances, trend lines, support and resistance levels, volume concepts, you just take your trading to the next level. But again, let me wrap it all up this morning by saying we designed the Sniper tools to not need any of that stuff. Now that doesn't mean that we don't think it's important to continue to grow your knowledge and to understand and to start to learn about a lot of that other stuff, and that's why we support you in doing that and teach you how to do a lot of other stuff. But the Sniper program is designed for you to be able to take these powerful systems, create a trading plan around these powerful systems that have 2, 3, 4 rules to them, very easy to follow, backtest that. Well, first of all, determine who you are as a trader by finding out and determining your own key trader characteristics. Almost nobody does that, and it's one of the most important things to your ultimate success, is knowing who you are and then building a system around your personality. So you find out who you are. This is what happens during the 90 Days to Success program. You find out who you are, then you determine which one of these 1 or 2 systems, Sniper systems, you want to focus around. You create a trading plan of a group of trade specifications around that trading system that take into account your key trader characteristics, your personal makeup. Then you backtest that and you determine what you've created has an edge. Then you sim trade and you're off and running. And you can make money, you know, starting much more robotically. As you grow as a trader, you're going to add a few more rules and nuances to your trading plan. Your win percentages are going to increase. Your profitability is going to increase. But we want to get you making 150, 200, 250 bucks a day as quickly as possible, and that's how this program's been designed. So you don't have to take months and years to learn all this other more intricate stuff. You can get started making money, and then you grow and you learn as you're going, and that helps you increase and take your trading skill to the next level. So that's a wrap for today, guys. Have a great weekend. I'm anticipating another quality week of price action. In spite of the fact that it's the summer next week, we're going to take what the market gives us, and there's a lot to learn, you know, even when these conditions are a little bit more subdued. So I anticipate next week being awesome. Look forward to hanging with you guys during that. Have a great rest of your weekend, and we'll see you next week. Thanks, everyone.